So I think in general, when you look at listed funds, a listed fund would generally trade in a formalized exchange. And in our case, we are looking at the Botswana Stock Exchange. So listed real estate funds would pull funds from a number of investors in the stock market and invest in the different sectors of the property market. And here we are looking at your retail investments, which comprises of shopping malls. We are looking at the tourism sector, which would look at hotels. We're looking at industrials, which would have things like warehouses and the like. And they will generally generate their returns from what you call rental returns and the capital returns, which are made of property revaluations. And typically they will distribute income to their underlying shareholders in the form of dividends from those rentals and capital appreciations. And then in contrast, if you look at the non-listed real estate funds, they are privately held, and I think that's a key difference that you want to highlight. They are privately held and they pull funds from qualifying investors. And qualifying investors here could mean anything. It just means investors who come together with a common goal. It could be pension funds, it could be family members, it could be friends, who come together, pull funds together and invest in the different sectors of the property market, similar to what a listed real estate fund would do. And the difference also is they will generate their returns, from the underlying rental returns and capital returns. They can decide to distribute, or they may decide to reinvest those returns into further investment opportunities or further properties to grow their portfolios. So we have a flagship fund, which is called the Bifm Local Property Fund. It's an unlisted property fund. It is open to a number of, small to large institutional investors, and it is one of its kind in the market. It was established as a unit trust under the NBFIRA Collective Undertaking Act, or the CIU Act. And looking at both the listed and unlisted real estate funds, general research has shown that both the listed and unlisted real estate funds, they are exposed to the same real estate factors in the long run. But if you look in the short run, due to, different factors that affect the stock market, such as, the performance of the economy, generally what is happening in the economy. If you look at interest rates and the likes, you would expect a bit of volatility or noise in the stock market, and the listed real estate funds would tend to follow that noise as well. So they can swing either upward or downward depending on what is happening or what is driving the performance of the market. However, if you look in the long run, because the two are invested in underlying properties, you typically expect, when you account for leverage, when you account for smoothing effects and sector differences, you typically expect the returns to be somewhat the same or to converge towards a common point. And I think that's an important factor to also highlight in terms of the performance of the two. So in the context of Botswana, we've looked at property returns from 2012 to 2021 to try and really establish if indeed what we've established from theory or from research is true, at least in the context of the local market. And we generally note that there is a weak but positive correlation between the listed property returns and the unlisted property returns. As I said earlier on, the listed property returns are more correlated with the performance of the stock market in the short run. And in the long run, however, they tend to sort of somewhat get closer, their performance gets closer to those of the unlisted property market. And then looking at also the same period from 2012 to 2021, we also note that the returns of both the listed and unlisted property funds have outperformed against inflation. So the returns were both higher than inflation. And for the same period, it's also important to know that the returns of the unlisted real estate funds were generally higher than those of the listed real estate funds. So from our observation, we draw two important conclusions from the data that we have observed in terms of the returns of the listed real estate and the non-listed real estate funds. The first one is unlisted funds have generated higher returns than listed funds in the long run. And this is really due to the fact that their returns are directly correlated with the underlying returns of the property market. And then if you look at the listed property funds, in contrast, their returns tend to simulate in the short run the returns of the stock market, which can really change or be a bit more volatile depending on the drivers of the economy at a point in time. And then the second important conclusion is that both the listed and unlisted real estate funds in the period that we looked at have outperformed inflation. And this really supports the general notion that real estate acts as an inflation hedge in the long run.